Yeah, good evening. See, now in the previous class, we have seen what are various formats as given in the Companies Act, Division 1, Division 2, and Division 3. We have just seen the divisions. Okay. Now, before I get into the format, it is better to understand Accounting Standard 1, disclosure of accounting policies. See, in accounting standards, what will happen? It is a 4 or 5 pages document. There will be main principles, which are bold italic. Okay, they are the main principles. Rest of the things is, it is a explanation or procedure. Some are in bold, some are in non-italic and bold. Okay, so those are also important, no doubt about it. But main principles will be in bold italic. That you can, whenever you go through the accounting standard, whichever are given in bold italic, you have to see that what it is given in, because it is the main standard. Okay. Now, if you see in Accounting Standard 1, disclosure of accounting policies, they have given these 4 paragraphs as in bold italic. Okay. So what it says, let us read and understand. All significant accounting policies adopted in the preparation and presentation of financial statement should be disclosed. See, we have learned various ways of accounting. Okay, I have told you some accounting entries for various transactions. Okay, that is what we have started our class. So, like, if you take the example of depreciation also. Okay, so depreciation. Somebody will take the entry to accumulated depreciation. Somebody will directly credit the asset with the depreciation, which is not the right way, because accounting standard says you have to maintain book value of the assets. Now we are talking only about companies under Companies Act. Okay, that you have to remember, because we are discussing about Division 1 financial statements. So there are various ways of accounting. Okay. Different companies will follow different ways without disturbing the fundamental principles of accounting. Okay. So whatever policy you are following, see, this maybe in first or second class I have told you that when you go for audit or when you join as an accountant in any company, if you are doing any accounting work, okay, first thing you should ask is policy document. Okay, apart from accounting policy, you should also take other policies. Okay, that is not our point of discussion here. So at least you should have accounting policy with you, so that you are following the same procedure what is followed in the organization. If I am new to the organization, then I have to understand how they make the entries. Correct? So by seeing the accounting policies, you will be able to make the entries. Why it is required? Because different entities follow different accounting policies without disturbing the basic fundamentals of the accounting. Okay. So what this standard says is, whatever you are following the accounting policy, in the preparation and presentation, please understand there are 2 words here, preparation and presentation. Okay, one is preparation, second one is presentation. See, the main purpose of accounting standards is disclosure and presentation only. Okay, why it is required is it has to be comparable between different entities. It has to be comparable between 2 or more years. Okay, 2 financial or more financial years. Okay, and it has to be easily understandable to the any outsider or insider with minimum knowledge of accounting standards. See, if I see a balance sheet, then I will know, okay, as per accounting standard, they have to make this provision or they have to disclose like this. Suppose if I see some financial statement of some company, I will see in the P&L statement salaries and salary cost. Okay, then I know there will be a schedule for it. So I will go to the schedule and see what is the breakup they have given. What is the salary? What is the bonus they have given? What is the superannuation fund they have given? Okay, what is the PF amount they have contributed? All these things breakup will be given. Okay, if I take some other company also, it will be same way it will be presented or disclosed. Okay, so it is easy for me to compare the financials of different entities or financials of different financial years. Okay, that is the reason the presentation has to be in line with the accounting standards, and you whatever the policies that particular entity is following, it has to be disclosed. That is what this main principle is saying. Next is the disclosure of the significant accounting policies as such should form part of the financial statements, and the significant accounting policies should normally be disclosed in one place. See, what they are saying is, okay, whatever accounting policies adopted, should be disclosed, and it has to be disclosed as part of financial statements. See, when you are making financial statements of any entity, maybe you would have seen in couple of years you are working earlier. I don't know, you have been working in V&V. You would have seen some company financial statements in Excel, or when you see the output also, final output, you would have seen accounting policies, one sheet will be there. There, nobody will check. Why we don't see that? It is a just you will go there and you will change the year. Why we do that? We do that because once the accounting policies we have decided, management has decided, 99.99% they don't change the accounting policy, and they should not change also. Okay, if they are changing frequently, okay, this year if we follow this policy, it is advantage to us. Next year we will change to the different policy. Third year we will change to some other policy. It will not work out like that. Okay, if you have decided to follow some accounting policy, then you have to consistently maintain that policy throughout the period of the company. Okay, of course you can change it. Then there should be a reason why you are changing. What is the effect of that particular change? All these things are also to be disclosed. That it will come in the next paragraphs. Okay, so what they are saying is you have to maintain all these policies at one place, and it should form part of your financial statements. Please, that is the reason we are maintaining that particular notes to accounts, that particular sheet. Okay, unchanged. We will only go and change the year, date of signature. That's all. Okay. Reason being, policies doesn't usually change. Whatever policy earlier years we have followed, the same policy we are following. Okay. Next, any change in the accounting policies which has a material effect in the current period or which is reasonably expected to have a material effect in later periods should be disclosed. See, this is what I told you right now. If you are changing, no problem. See, there is some incident happened. Either there is some problem due to a change in the market scenario, or there is a problem like when COVID came. So suddenly we have to follow some other policy. Okay. In those cases, what standard says is, okay, if you have made a change and it is materially, if it is materially changing, if it has got material effect, okay, then please disclose that see material effect. Okay, if there is a material effect of that particular change in the financials, if there is a material effect with that change, then you have to disclose that materiality in the financials also. Okay. In the case of a change in accounting policy which has a material effect in the current period, the amount by which any item in the financial statement is affected by such change should also be disclosed to the extent ascertainable. See, with whatever possibility is there, you have to arrive with, by doing this, by changing this policy, the effect on the financials is so much. Suppose I will take one example, same example of depreciation. Now company has decided to follow straight line method. Okay. Suddenly they have decided, for whatever may be the reason, they have decided to change the accounting policy from straight line method to WDV method, written down value method. Okay. Then if you have to disclose what is the overall defect effect as on date, say that particular company is 5 years old. So from 5 years, you have been following SLM, and suddenly in 6th year, you have decided to follow WDV. Okay. Then you have to disclose what is the effect on P&L by shifting from SLM to WDV, and what is the change effect in current profit because of that. Okay, like that you have to disclose the change is from SLM to WDV, and the value of that change which is affecting my assets and also my depreciation or P&L is so and so amount with this change, that you have to disclose. Okay, where such amount is not ascertainable, wholly or in part, the facts should be indicated. Suppose you are not able to ascertain the differences because you do not have sufficient data. Okay, then you have to say even that particular aspect also in the financials, that we are not able to disclose the effect of this particular change in the financial statements. That also you have to mention. Okay. Now the last point is, if the fundamental accounting assumptions with going concern, consistency, and accrual are followed in financial statements, specific disclosure is not required. If a fundamental accounting assumption is not followed, the fact should be disclosed. Sorry. See, another point what it says is, there are fundamental accounting assumptions. Okay. What are the fundamental accounting assumptions? That is going concern, consistency, and accrual. Okay. Going concern. What is the meaning of going concern? When you are preparing the financial statements as on the date of balance sheet, say for example, for this financial year, 31st March 2024. Okay. On 31st March 2024, with what assumption you will be doing the finalization? By default, that this company is not getting closed in next 12 months. Okay. Reason being, why you are preparing the financial statements? It is going to be useful to internal users and also external users. So internal users, if you come to internal users, then forget about management. At least management will know that whether this company is going to be in existence or not. Even whether you report, you don't report, you prepare however you want. Okay. Let me take the employees. Okay. Employees will be under the presumption that this company is going to be there continuously. Suppose if you say in your financial statements that this company is not going to be in existence within 12 months, coming 12 months, then employees may think of their continuation in their job. Okay. Or people who are wanting to join in the organization, they also may think. Same way, if you see external users, like banks, whoever has lent money, Okay, like any other debenture investors, okay, even they will think to withdraw the money or to ask for the repayment of their loans, right? So, without saying that, these fundamental assumptions, okay, are the name, as the name itself says assumptions, it is presumed that these are accepted. Okay, that means this company is going to be in existence for next 12 months. Okay, and consistency. Now, just now we have spoken about the consistency, like policies, accounting policies. Okay, so we have been maintaining the consistency. There is no change in the any policies of the organization. Okay, accrual basis. Accrual is nothing but mercantile basis. Okay, that this company is following accrual system of accounting. Okay, what is accrual means? Once you incur the expense, whether you have paid or not paid, once you have rendered the service or goods are sold, whether you have received or not, then that particular amount has been either recognized as expenditure or recognized as income, whichever is applicable. What the standard says is all these three fundamental accounting assumptions, if you don't report anything in the financials, that means they are followed. Okay, that is why it is called assumptions. Okay, suppose if you feel that this company is going to be sold in 3-4 months as on the date of the balance sheet. For example, 31st March 2024, management has got some advance. Okay, 10 crore advance has been received from some party. Then you went and asked the management, why did they pay 10 crore to your organization? Then management said, see, we have entered into a deal where we are going to sell this company or merge this company, or we are selling some unit, okay, of this particular company. Then it is your responsibility to report that this particular organization is not going to be in the, you don't say it is not going to be in existence, because it is only a deal which occurred. You will at least report that they are in the process of selling this particular unit or selling this particular organization to so and so, and there is some arrangement, okay, between these two entities. Like that, you have to report. If you don't report anything on with respect to these three assumptions, that is going concern, consistency, and accrual, that means it is followed as it was earlier. Same way, if you see company has changed the depreciation, I am taking same example so that you will able to compare it. Depreciation, see, company has changed their depreciation accounting from SLML to WDB. Okay, if you don't report, as a layman, how will I understand suddenly there is a increase in fixed assets? See, in SLM, what will happen? The value of depreciation will be more, okay, compared to WDB. You agree? So suddenly last year my total WDB, total WDB of assets, net assets was say 1 crore. Suddenly it has gone to 1.5 crore. Then as a layman, what I feel that there is a some 50 lakh worth of, approximately 50 lakh worth of some new assets have been purchased by the entity. That is what I will understand. But actually, if you see, it is not the case, because they have shifted from SLM to WDB. That is the reason the increase in fixed assets. It is not because of this purchase of fixed assets. Okay. So, what the standard says is, whenever there is a change in these assumptions, you are supposed to report. Okay. If there is no change, then you need not report. Then accrual basis. See, no company follows cash basis. See, we have two methods of accounting: accrual and mercantile system and cash system. No company is allowed to follow cash system. but it is one of the assumptions. Okay. Then coming to considerations in the selection of accounting policies. What the standard says is, see, you follow any accounting policy. We are not bothered, but there should be these following characteristics of the accounting policy. The characteristics of the accounting policies should have these three items. Okay, one is prudence. See, prudence means what it says. See, that you have to recognize all expected losses. Okay. If you know that there is some kind of loss to the company, then you have to recognize it. Whether you have incurred the loss or not incurred the loss, it doesn't matter. Okay, so that is what prudence says. So whatever accounting policy you are following in the organization, it should be prudent. That means whatever known losses are there, you have to consider it and account for it. Okay. Next, coming to substance over form. What substance over form says is, see, there may be some agreement which have certain terms. Okay. However, whatever, say, for example, say rental agreement only. Okay. Rental agreement says, suppose if the company make loss of any particular asset, whatever rented out, okay, then it will be adjusted against the security deposit. Now this company, whichever you are preparing the financials, has taken a property on lease and they are operating the business. In that case, this company has to hand over the property as per the rental agreement as it is with normal wear and tear to the owner. Okay. If not, agreement says that it will be deducted from security deposit. Okay, very simple example I am taking. Now, some damage occurred in the property, say some fire, small fire, something happened and the property got damaged on in the month of March. Now, owner will not adjust the security deposit right now. When the owner will adjust the security deposit is maybe whenever they hand over and vacate the premises. This is the agreement. But actually, if you see, the loss is already occurred. Once the loss is occurred, it is the responsibility of the company to ensure that provision is made for that loss. Don't go, then what management says, it is not adjusted, then why you want to take into accounting this particular loss? No, that is the reason I am saying substance over form is important. Okay. Next, coming to materiality. Okay. See, suppose the total turnover of the company is 2000 crores. Okay. Say, for example, 20,000, 30,000, some material. It is not material actually. Okay. See, that even the materiality aspect has been defined, say 0.1%, 0.5%. Okay. Then you may ignore it. You need not consider it as a material item. Okay. So based upon the materiality, considering the size of the company, it varies. Okay. So whenever you are framing the accounting policies of your organization, you should keep all these items in mind and decide the accounting policies. Okay. Only then they are called correct policies. Fine. Apart from this, what other details which are disclosed in the standard is, here I have mentioned, accounting policies differ based upon various circumstances in which the companies are operating as decided by the management. See, why they are highlighting these fundamental assumptions, considerations in the selection of accounting policies and all is, as we discussed, there are various ways of accounting. Okay, even if you have seen 4 or 5 companies, the different people account in different way. Okay, even I have seen in one of the companies, their books of accounts, all bills payable will reflect debit balances, all bills receivable will reflect in credit balances. Usually, if you see the nomenclature of the account, bills receivable, then what is your general assumption is that bills receivable should show debit balance only. But they have used that nomenclature for their business purpose in their accounting policy. Then, okay, as far as it is not disturbing the presentation and all, it's fine, and they have got the reasoning for it. Okay, it is no way affecting the fundamentals of accounting. Okay, so what the standard says is there are different ways depending upon the circumstances where that particular company is operating also. Okay, and depending upon their business also, different businesses. Okay, based upon that there will be different policies. So you have to follow these particular standard so that the fundamental accounting assumptions and these considerations will not miss out. Okay. Next, coming to disclosure of accounting policies should ensure proper understanding of financial statements. See, what they further says is, whatever you are disclosing, it should give meaning to the other person. Otherwise, what is the purpose you do all this thing? Okay, if you are disclosing something, but the other person is not able to understand, then what is the purpose? So what they say is, whenever you are preparing the financials, presenting the financials, preparing and presenting the financials, you should disclose these aspects in a proper way where the other person can understand. Okay. Next, such disclosure should form part of financial statements. This point we have noted it in the previous slide, that it should be part of the financial statements. Next, and this disclosure should be helpful to the reader of financial statements. The same thing. Change in accounting policies which has material effect should be disclosed. If not ascertainable, the same should also be stated. This is also we have mentioned. See, this is the explanation which they have given under the main principles. Okay, I thought I will highlight those again. Okay, next is that disclosure of accounting policies or changes therein cannot remedy a wrong or inappropriate treatment of the item in the accounts. Okay, what they are saying is, you follow a wrong procedure, okay, and just disclose it. And if someone comes and asks you, I have disclosed it, I have followed it, it doesn't work out that way. Suppose, say, for example, interest on borrowings. Interest on borrowings is generally an expenditure. Okay, it has to be taken to P&L. But what you have structured your accounting policy that you will not debit the interest on borrowings, you will debit it to expenditure, unclaimed expenditure, which we show it on asset side. Okay, deferred expenditure. Okay, you show it under deferred expenditure, show your more profit. Okay, you attract more profit per equity share, you EPS you show more, and you try to take more money from the investors, or you sell your shares on the premium. And you will say that I have given in my policy that I will never debit the interest on borrowings to P&L, I will debit it to my asset. Okay, miscellaneous expenditure, and I will show it there. So what the standard says is, you cannot follow a wrong procedure and you disclose the same thing in your financials, and you claim that you have disclosed whatever the mistake you have done, so you are following the same wrong procedure. Okay, so the standard says it will not work out that way. You have to follow all the accounting policies with keeping in mind all these prudence, substance over form, materiality and all, and you have to follow these fundamental accounting assumptions. Okay, and you have to disclose the same thing if they are not followed in the financials also. Okay, this is what the accounting standard 1 says. It is very simple. Okay, now we will tomorrow, I mean Wednesday's class, we will move to the format, and then again we will get into another standard when we come to inventories or something like that. In between, what I will be doing it, I'll be taking the format in parallelly with accounting standards. 10 accounting standards we will be covering it, and this accounting standard I want to start because it is with respect to disclosure of accounting policies. So before starting the format, I wanted to start this. Okay. If you have any doubts, let me know. Otherwise, we will conclude the class. Okay, we'll meet on Wednesday. I will be sharing this document. It will be a continuation because all the standards will be in the same file. So it will be duplicate for you, but latest file will have all the data. I'll be sharing this document. Okay, thank you.